So, time for business now. Brian is with us here on set. He's starting in France today. The latest edition of the Choose France Investment Summit is focusing for the first time, this time on domestic companies, Brian.
So the Choose France Summit was launched in 2018 by President Emmanuel Macron in a bid to encourage foreign companies to invest here. The current edition, though, is aimed at pushing French firms to boost their domestic activities. More than 30 billion euros in investments are set to be announced on Monday, with 9.2 billion in new projects from companies like Safran, Mistral AI, and Sanofi. Emmanuel Macron has been trying to revitalize France's industrial sector with some success. Over the past 3 years, new factory openings and expansions have outnumbered cutbacks and closures, not by a massive amount, though. Monday's gathering here in Paris will include roundtable discussions on the national budget, industrial sovereignty, as well as AI and digital sovereignty and the circular economy. The country's budget minister and prime minister will be on hand, seeking to reassure skittish business leaders as the government tries to get Europe's largest budget deficit down under 5% next year. Some 53 billion euros in new taxes and subsidy cuts have already been voted in Parliament. Macron, meanwhile, is calling for explicitly protectionist measures for European industry. Here he is on Friday.
We are currently experiencing accelerated globalization. Trade is brutal. We need to protect ourselves more quickly and more strongly because unfair competition is taking hold, driven by overproduction in China, which is having a huge impact on many industrial sectors. The protection we are fighting for today is that of a European preference that must integrate into value chains the capacity to produce in Europe.
Japan next for Brian. A diplomatic spat with China is hitting the country's crucial tourism sector.
So Japanese retailers and tourism operators on edge after China warned its citizens against traveling to the country. That warning came after a new Japanese Prime Minister Sanae Takaichi suggested that her country might be compelled to intervene militarily if China were to invade nearby Taiwan. Takaichi has long been seen as a China hawk. Japan, though, relies on Chinese visitors for nearly a third of its tourism revenues. Gabrielle Nadler has the story.
Crowds at Mount Fuji and the Sensoji Temple may get a lot smaller. China has warned its citizens against traveling to Japan amid rising tensions between the two East Asian countries. Given China is the biggest source of Japan's tourist market, the warning's economic hit promises to be significant.
My personal view is that since the government has said to avoid Japan, then it's best to go less.
Nearly 7.5 million Chinese tourists went to Japan from January to September of 2025, according to Japan's National Tourism Bureau. In the third quarter, these visitors accounted for 28% of international tourist spending, with 590 billion yen, or $3.8 billion. The travel warning was issued following Japanese Prime Minister Sanae Takaichi's comments on Taiwan. She said if China were to use force around Taiwan, it could constitute a survival-threatening situation for her country, which would permit a military response. Faced with economic and diplomatic strain from the tourism warning, Japan hopes to de-escalate the situation.
I believe this announcement, which seems to curtail the exchange of people between the two countries, including study abroad and tourism, is incompatible with the broad direction of promoting a strategic, mutually beneficial relationship confirmed by the leaders and building a constructive and stable relationship.
Senior Japanese diplomat Masaki Kanae is set to travel to China Monday for talks with his Chinese counterpart Liu Jinsong, reported Japanese media. Kanae is expected to affirm that Takaichi's comments do not change Japan's traditional position on Taiwan, which has been marked by ambiguity.
And Brian's going to round up by looking at the day's trading action. How the market's shaping up, Brian?
Well, Japanese tourism and retail stocks, perhaps unsurprisingly, took a significant hit on Monday from those tensions with China. Cosmetics giant Shiseido down more than 9%. Department store conglomerate Isetan Mitsukoshi off by more than 11%. We see Oriental Land, the operator of Tokyo Disney, down by more than 5.5%. Japan Airlines off nearly 4%. The Nikkei index overall, though, down just 0.1% as the Japanese economy contracted declined by less than expected last quarter. Major Chinese indexes faring a bit worse. Shanghai off 0.5%, Hong Kong down nearly 1%. The Kospi and Seoul, meanwhile, up nearly 2% after large Korean firms like Samsung and Hyundai announced big new investments on the heels of a trade deal with the U.S. Here in Europe, major indexes with a fairly lackluster open as investors cast a pessimistic eye on what many worry could be an AI bubble. The DAX in Frankfurt up slightly, though, as Germany's finance minister lands in China for trade talks amid a record trade deficit that is only widening. German automakers in particular will be keeping a close eye on those talks. They're heavily reliant on China, and we'll be keeping a close eye on those meetings today, Stuart.
Brian, thanks very much. Brian Quinn with the business news for you on Fridays.